a simple top-down analysis approach. Going from the higher time frame down to the lower time frame, looking for entries is one of the most difficult things that traders struggle with. However, in this video, I'm going to give you guys a simple approach that anyone can use for their top-down analysis and how you can go from the higher time frame down to the lower time frame, maximize your risk reward, maximize your win rate, and have massive moves in order to gain further profitability. Now, before we go ahead and begin, why should you listen to me? I've been in the space for about 6 years. I've done multiple six figures in payouts. I've gotten multiple withdrawals, multiple max allocations with reputable firms, payouts across the board, as well as even being able to trade personal capital, doing account flips before my time with props. So I have a lot of experience and I have a lot of proof behind what I'm teaching. Now, if that's not enough, I also give my trade ideas for free to showcase the concepts that I use on a weekly basis. So make sure to join the free Telegram in the description below and subscribe to the channel because we are dropping weekly content and going to be the #1 YouTube for education. Now, in order for us, whenever we talk about a different concept, we always have to identify what makes that concept good, bad, great, etc. So these are the 4 things that you need to identify a good top-down analysis and what they include. So we're going to go into every one in depth, but just to name all of them. Number 1, identifying trend and market environment. Number 2, identifying key levels and price on higher time frame. Number 3, using intraday price action and kill zones to confirm a potential trade idea. Number 4, lower time frame entry models to signal an entry. So we're going to go one by one on each of these concepts and go further in depth. So number 1, very important, we must identify our current trend/market environment. Are we trading an impulse leg? Are we trading consolidation? Are we in a downtrend? Now, it's very important. When we know that we're in a bullish market, we know if we're trying to time this higher low. In order for a higher low in a bullish market to be confirmed, it must make a new high. And that's what we see here. And this is where we look to identify potential trades. And we know, hey, you know what? This can really push higher into a key level. Same thing with a downtrend. We know that there's lower lows, lower highs. And if we're anticipating a potential lower low down to this low in here, this is ultimately going to give us a potential for a move lower. And we know that, hey, we can look for sells at key levels, which we'll talk about next, at this key point. Also, when we're in sideways range, we want to identify that because we know that the range is limited. We know that if the market makes a new high, that it's possibly going to reject, go back into the range. If the market goes into a new low, there's a potential for the market to have an impulse back up inside the range. So it's very important to identify because it really helps with the risk management portion and it really helps identifying key levels that we want to trade. Which leads us into number 2, identifying key levels and price. So for us to have good trade ideas on the lower time frame, it's imperative that we identify key higher time frame areas in order for us to trade frame trades. Now, this is a good example here where the market has a low, high breakdown, and we have a fair value gap in here. And look how the market reacts back up in here. We have 2 reactions, one here and then one here, and then the market ultimately drops lower. So if we identify this impulse leg and the market rallies up into this area, we then look for a potential confirmation for the market to head lower. Also, inversely, let's just say you saw this from this swing low to this impulse push up, the market comes down into this order block in here, these consecutive down close candles before the move up. Now what we have, you could trade the market from this potential range to here. This was a daily chart bar. So again, these daily candles are offering, hundreds of pips. So even if you do the bullish side and you identify, hey, even if it doesn't make a new high, this is the next potential area at this current point in here. This gives you a nice 100 pip plus to take advantage of. Now, I do want to preface this. Just because the price is at a key level, it does not mean that just because price is there, it's an area where we're 100% going to get a trade. There has to be multiple confluences to validate the level. So on an impulse leg like this, I ideally like to see this type of impulse after maybe clearing some sort of liquidity or maybe at a key higher time frame level that's somewhere here. So if this was the daily time frame, I'll go a time frame up. Was this an impulse that was created off of a weekly level? That's something that's very important. And I want to obviously see lower time frame entries and confirmations when we hit those areas in time windows. Now, intraday price action and kill zones, this is very important for me. Once we have the higher time frame established, we then can go down into the lower time frame. So we need those two things on the higher time frame, and then we can go into the lower time frame. Kill zone timings that I use based on SMT teachings are the following. London session is 2 to 5 a.m. New York session is 7 to 10 a.m. I personally don't trade Asia, so I'm not going to include that. However, I do want to preface this. For a London session, I prefer 3 to 4 a.m. For a New York session, I prefer 8 to 9. Or 8:30, 9:30. It's really within that 1 hour time window. Simply put, you're going to have the most volatility during those 1 hour time windows, and it's much easier. So again, on my charts, I like to have it labeled out like this, so I know these are the time windows I'm looking for potential trades. It also helps, right? Like if you know that you're trading for a specific pocket of time, it helps with your focus and trade management because you know you're going to be locked in for that amount of time. So now we can get into lower time frame entry models. So there's multiple lower time frame entries models that we can use when we're on the lower time frame. These are the ones I'm going to be using on a weekly basis. I'm going to go over the most basic one, and we can then go further and add into this. However, I don't want this video to be too long, so if you guys want a separate video on all the lower time frame entry models that I personally use, make sure to let me know in the comment section below. But nonetheless, if we are looking for a specific bearish day, so we have everything outlined. So let's just say on the higher time frame, this push up is essentially a push into a higher time frame level. This push up is occurring during a specific time window in kill zone, and we get a market structure break. The key for the market structure break, it has to occur during that time window, and I'll show you guys a full example of this, and it has to create a fair value gap. It's very, very simple. Market structure break, price comes back up into that fair value gap, and then we look for that move lower to tackle all the liquidity. Think about all the trendline liquidity that's resting over here, and if we have like let's just say a fair value gap that's somewhere around here on a higher time frame. So if this is like our M5, M15 entry, and we have a 1 hour fair value gap over here that has not been traded to, that could be a potential target. The key is that, before the retracement happens, you want to make sure that there's liquidity that's resting and that there's a higher time frame level. And we're going to show you guys an example on this. So here's a perfect example. This is Aussie, and I'm going to go through the charts and pretty much piece everything together. But for now, I'm just going to show you guys the lower time frame entry model. So again, what was I saying? I want to see a higher time frame level. Key level inside of a kill zone, price hits this area, and we have a structural break. So for me, New York Open, I love to see it between 8:30 to around 9:30, 8 to 9. You could use either one; it's fine. I want to see the structural break during that specific time window. So again, when I look over here, I'm not interested in any of this structure. I'm only looking for structure occurring within higher time frame levels, kill zones, inside my specific time window. Once we have a market structure break, we now form this fair value gap. So we have this imbalance point in here, and we have the breaker block because, again, we have that low, high, lower low, price breaks back above. So this is also an extra confluence within the imbalance point. Now, the key thing, again, is we have a buy-side liquidity. So we have equal highs that's resting over here. The market structure break happens again inside of our time window, and we have a higher time frame premium level, which in this case was a 1 hour fair value gap. You guys are going to see this in a few, just when I go through the trading view chart, but just to show you guys the lower time frame entries one more time. Boom, price comes back into that fair value gap and price makes a new high. So now we're on the backside of the move, meaning the market maker buy model, higher highs, higher lows, whatever you guys want to call it. I like to call it backside move because now the market has shifted bullishness. So the key thing about this as well is, like, as the market is moving in your favor, if you're someone who likes to add into positions in pyramid, this is a potential opportunity. Swing high, swing low, market pushes up. This could be a potential area where you look to buy, again, anticipating a potential higher low. As long as the buy side liquidity is still resting, you can always look to add to positions. Adding to positions is a skill, it's an art. And it's something that I typically will do because it really helps for the winners. We'll talk about this when we get into the actual trading view charts, but nonetheless, we see that the intermediate term price objective is met. So if you can get an entry here, even if you don't add a position, you can now trail your stop loss as the market moves higher into your favor and ultimately target the buy side liquidity. So again, guys, it's very, very simple lower time frame entry model. If you just have a higher time frame level present, you get a market structure break inside of our time window, and we have opposing liquidity, your win rate will go up significantly. Now, if you guys want to get access to this PDF, make sure to follow me on Instagram. Here is my handle. It's going to also be in the link in the description, and DM me top-down analysis, and you will receive access automatically right away as soon as you DM me. I have it automated so you guys don't have to worry about it, and you'll get it ASAP. So again, make sure to go ahead and follow me on Instagram and DM top-down analysis for this full presentation. Now, guys, there's so many different lower time frame entries. I don't want this video to be, an hour long. So if you want a video dedicated to multiple entry models that I use with SMC concepts, then make sure to subscribe and let me know in the comment section. I go through the comment section every single video to see what you guys want, what you guys need. But for now, let's go ahead and let's get into the charts and break down all the steps on this example. So let's take an example of this Aussie USD trade example, and we're going to piece up all the steps required to do a top-down analysis approach. So again, number one, identify the current trend. So we know if we identify, current impulses, I don't care what's going on all the way back there. What's happening now? I know that the market has a fair value gap. It traded higher. So now we're inside of a bullish leg. So again, even if the market creates if this is a turning point, for me, I'm just focused on this current leg. Now, inside of this current leg, I already have this marked out. So again, very simple. You don't have to overcomplicate it. Plus, you can see, a bunch of equal highs that's resting in here. But nonetheless, even if it goes into consolidation, we know inside of this impulse range, where are our imbalances? Where are our key levels? So we have this key level in here, which is going to be our mitigation point because, again, this was essentially our breaker. Drop lower, clears liquidity, and then price has an impulse push up. So we can mark this area out in here. And it coincides with what? It coincides with this imbalance. So there's two imbalances. Which one do we choose? We choose the one that's inside of a discount level. So again, very basic ICT concepts. A discount is anything around 50%. So I'm just going to mark up this fair value gap in here just so that we don't have too many levels. And that's perfect. So now we know that we're at the 50% mark and there's an imbalance right there. Now, I also like to map out. So if I know that, this is a potential higher low point, I know that the market is primed to potentially, because we don't know for sure, to go up into here. Now, on the retracement lower from swing high down to this area, down to a discount, is there any key levels that we have to watch out for? For me, I would map out this fair value gap in here. Because again, if the market comes from here, we might, if we're wrong on the idea, we have to monitor this level. This could also just be a near-term objective on the way to this potential high. So this could be an area where we maybe take some profit off the table. Again, these are daily bars, so there's going to be a good amount of ranges. If we just go ahead and do this, so from here to there is already like a 45 pip move, and then from up to here is over 100 pips. And it's Aussie, so other pairs are typically more volatile. And you'll see a wider array of pips. So now everything that's mapped out. So again, number one, we identified our bullish impulse and the trend. Number two, we've identified our key levels inside of discount. And we also identified like a potential area where if we're wrong on the idea, like let's say price went up here and tanked or stayed in consolidation inside the range, we just want to monitor this potential area. So now that we've identified our key higher time frame levels, our key higher time frame trend, now we go into the next steps, which is looking for potential areas in here on the lower time frame and looking for confirmation entries within kill zones. 3 and 4 is really could be combined together as one step, but let's go ahead and let's get into the lower time frame. All right, so now we're here on the 5-minute time window. So again, when it comes to the 5-minute time frame, there's so many different entry techniques that I like to use. However, we're going to go over the ones that's very simple and honestly one of my go-to ones where it's just a basic market structure break at a key level inside a key time window. So I'm going to go ahead and put the indicator on, so sessions. So this is going to pretty much delineate my London Open, which is 3 to 4 o'clock. Again, these are the specific time windows I like to see and try to get potential entries. And again, from 8 to 9 o'clock. Now, as long as the market structure happens kind of within this time window, that's why I put 9:30 because sometimes it'll be a little bit past 9. However, there's a whole system I have around this, but we look for trades inside of these time windows. These are the most volatile times inside of the marketplace. So now that I see this is the same example that I was using earlier for the presentation slides. I understand also that there's liquidity over here. So if we go on the 1 hour, there's a fair value gap as well in here above that high. We also have a bunch of trendline liquidity above here. So we have buy side liquidity that's resting. And we also have, again, this is a 4-hour fair value gap. I'm sorry, this is a daily fair value gap that we kind of reference as well. So we have all our levels aligned. And again, as a day trader, you can just kind of take profit at a 1-hour level, because if your trade's from here to here and stop loss beneath there, that's all you can really care about. So let's go ahead and let's play this buy bar. So again, the reason why I also like this one, because we're at a higher time frame level. So again, we're at a key level inside of a key time window. Not only that, but we also took out London. We're below London low, and price is now inside of this area. Also, during Asia session, we kind of just dropped lower, and we're below Asia low. So we have so many different liquidity pools that's being taken into that key level. That's what you want to see. Is liquidity being taken into that key level? Is liquidity being engineered? We know that we have buy side liquidity above here, and we know we obviously have that 1-hour fair value gap that's up there. So these are the key time windows, and everything is just aligned all together. Now again, what do we wait for? We wait for a market structure break now, because again, we're inside of our key time window, which is very paramount in here. We're inside of our key time window, and we play this forward. Boom, price breaks back above, and we have this imbalance point. So again, this could be our potential entry. Now, when people ask, where should you place your stop? Everyone's going to be different. Some people want to place the stop loss. Like, let's say they take the entry around the 50% mark of the fair value gap. Some people will have it very tight like this. I personally like to put it below the low of that impulse push up. Some people are pretty conservative and they want to keep it below that low, the overall impulse. It's really up to the individual. So for me, again, I personally like to put it around here just to give a little bit better risk to reward. And again, just off this one trade, because we're entering on the 5-minute on a lower time frame, look what happens. Price then pushes up. And this is for if you're someone who really wants to maximize your trading opportunities and your setups, this is what I will ultimately advise. You can then look, because now that we're inside of the backside move, right? Market structure broke to the upside, and we have the second impulse push higher. If you're someone who's super aggressive, this entry now goes to break even. And now what do? We mark out our prior structure from swing high down to swing low, and we look for the market to potentially give us another opportunity to come into here. So the market comes back, and then we're inside of OTE, so swing low, swing high, we're inside of OTE. This could be a potential another entry. And why is this powerful? Because if you enter again on another position, if you were risking 1R on this original trade, and let me remove this. So if you're risking 1R on that initial trade, and let's just say you're someone who risks $1,000 per trade, this trade here is like 5R. So I'm going to just put 5R just to make it make the numbers round. So we're at about a 5R gain. If this position goes to break even, and then you add another position here and you put the stop loss pretty much beneath that candle low, and you're risking, let's just say, $1,000, this second entry is also a little over 5R. Let's just say 5R just for argument's sake. Now think about it. You're now risking at this current moment when you're adding, if this position is at break even, you're now risking that 1R, but if both positions hit TP, you'll make 10R. So now you're risking 1R to make 10R potential. So now obviously the mark comes here, goes very close. However, structure is maintained. And now how do you trail your stop loss? I typically will put my stop loss beneath the swing low after market push up. So in this example, I'll put it beneath this swing low. If there's an imbalance, like in this example right here, I'm going to remove these. If there's an imbalance over here, where the market might wick lower, maybe you could just keep it maybe adjust instead of here, you put the adjustment there. However, at this point, price really should not go below that low and should maintain structure. So now we see that the market is pushing higher. Again, now it's coming inside of overall structure. And boom, we hit our objective. So again, we hit objective number 1. And how you want to take profit, guys, that's going to be ultimately up to you. You have to come up with some sort of trade management. So when it comes to trade management, it's really going to come down to you. But this is how I like to do it. You just trail. And again, one price, let's just say it sweeps this liquidity point. Maybe you want to take some partials, especially if you have 2 positions. Maybe you take some off the table. If you're someone who's no, I need to get my TP, then yeah, it's really up to you how you want to manage it. But ultimately, price reaches that objective. It did ultimately reach these higher time frame levels. But the thing is, when we have higher time frame levels, they might take a little while to play out. So I'm going to go down, back to the 1 hour just so that we can kind of see that as well. We'll see, and I'll remove the session times as well. like we'll see. Like again, this is that near-term objective because it's just an easier time. You're in and out the trade pretty much within a couple hours. However, if you hold into the next day, things become choppy and then it finally hits that. So you really want to get an entry somewhere here, then have to now deal with this potential pullback, or can you just take profit, know that this is a potential objective, and just look for another entry on this day in here. That's up to you. Hope you guys enjoyed the video. Make sure to like and subscribe. I'm going to become the #1 YouTube for education. I do believe that I have some of the best concepts and the easiest and simplest ways to approach the markets. So again, make sure to subscribe if you're new. Let me know in the comment section what you'd like to see. If you want the presentation, make sure to join me on Instagram and DM me top down analysis. Until the next time, I'll see you guys in the next video.